Good morning and welcome to Car Dealer Live. I'm James Baggett, I'm the founder of Car Dealer Magazine, and today we're talking to Marshall Motor Group CEO Daksh Gupta ahead of their AGM today. Now, this morning the group announced it would be repaying all of the furlough and retail rates relief cash it's received so far in 2021, as well as some impressive results for the first quarter. Daksh, thanks for joining me. Firstly, let's start with that bold move of repaying that cash when your contemporaries clearly have stated they won't be doing it. What's made you make that stance?
Well, morning, James. Thanks for having me on. I think, look, it's not for me to comment on what other companies do. I know different companies have got different views. It's not my position to really comment on that. But I think from our perspective, what we felt was, furlough and retail grants were there to support companies who needed it. We had a strong year last year. We delivered a profit before tax last year of £20.9 million, which was actually ahead of our original guidance for the year anyway. So we had a good year. The retail grants that we had last year and rate support and furlough money helped us get those numbers, to be fair. Our intention in December was that we were not going to utilise the furlough scheme or government support going into 2021. Of course, January came, and let's be honest about it, January was pretty horrible. We'll all remember those graphs where 70,000 new cases a day, 2,000 people a day dying. So for the health and safety of our colleagues and also our customers, we basically decided to utilise the furlough scheme, which was not our intention, as we said, going into the year. And obviously, as we sort of came through, as we sort of saw how we traded on, no doubt get into the operational numbers in a second, we came through and basically got to a position where we traded particularly well. The balance sheet is in great position. And as a company, it comes down to what's your values, what's your moral compass. And from our perspective, we felt it was the right thing to do to repay what we could. So we've just announced this morning we'll pay all of the furlough money that we've claimed this year, which is 2.6 million, plus the retail grants, which is a further 1.4 million, so combined £4 million. And we felt that was absolutely a great demonstration of our values. I'm incredibly proud that we've been able to do that today.
Daksh, yeah, I mean it's great to see you taking a lead on this. Let's just go into those operational numbers. Perhaps you can just give me some of the highlights for the first quarter.
Yeah, so if you look at first 4 months trading, the market was up 8.4%. So obviously up understandably because the operations were shut last year in April, as you'll know, that last week of March. So up 8.4%, but we were up actually 19.5%. So massive double-digit outperformance on the new retail market. So up 11.1%. The used car market, what we've done is we were up 42% to the end of April, but clearly that's massively flattered by the fact that we were shut in April last year. So what we've done is give a bit of a data point in terms of how we've performed, because the last data point was the SMMT quarter one stats. So you will have seen that the market was down 8.9%. We were down 1.7% only. And actually, again, the outperformance there was 7.2% on a like-for-like basis. So again, stellar performance. After sales did really, really well in quarter one as well. So overall, fantastic set of operational KPIs. And again, it's that fantastic performance that has put the group in the position where we feel we're trading really well. We've got really strong balance sheet. And last time we put our results out in March, you will have seen that we had around 30 million of net cash on our balance sheet. We have indicated that our cash is further strengthened clearly on the back of the operational trading position. And we felt it was the right thing to do to repay that money as a result.
And Daksh, you've stated some guidance now for the rest of the year, and I noted in that update that there are some concerns about continued COVID impact, possible local lockdowns have been talked about this week, and the semiconductor crisis is having a big impact on new cars. Perhaps you could just tell me a little bit about why you're confident for the rest of the year and what your concerns are around those issues.
So I think in terms of the guidance, so our original consensus numbers for this year was £18.5 million. What we have done is we've said we will deliver a profit before tax of not less than 22.1 million, which is in line with 2019, which was, of course, a year that was unaffected by the pandemic. So that is a huge upgrade, sort of north of 20%. And that also takes into consideration paying the £4 million. So you could argue, had we not paid the £4 million back, it would be 26.1. And remember that we're saying that's a floor. I guess the challenges that you've talked about there, James, is around the pandemic. Again, who knows what will happen with the pandemic? There's all sorts of Indian variants, local lockdowns, as you've said. Will the pandemic come back in Q4? Don't know, but that's why we wanted to call that out as a potential risk. And of course, the issue around semiconductors is all around supply. So that's another one that's quite difficult to call because we've got 17 car brands that we partner with, so it's difficult to sort of really put an exact number on how the market's going to be impacted, because some manufacturers are saying to us, actually, we're not going to have an issue. We've got some manufacturers saying this could be 30 to 40% of an issue. Some manufacturers, if they're not affected, clearly will have no impact, with their business will be unaffected. And then I've read articles where this is saying this could be around for 2 years. So it's still probably a little bit too early to get a full handle on what the impact's going to be. But of course, let's not forget, if you have an issue on new car supply, that has an impact on used cars, because of course, around 35% of what we sell in our used car business comes from part exchanges. But of course, if you can't sell new cars and do those PCP renewals, you can't then get those used cars in part exchange. If you can't supply new fleet cars, you can't get those fleet returns. If you can't supply Motability, you can't get those returns back. If you can't register demonstrators, you can't sell demonstrators. If you can't register courtesy cars. So there is a potential impact. People are thinking, I think, too much around new, but it does have a knock-on impact on used as well. So we're cognizant of that, but equally, we have kind of factored an estimate of what we think the impact could be, which is why we've sort of said we believe the floor is 22.1, having paid that £4 million back. Clearly, if there's minimal impact on supply, then hopefully we'll be able to do a better result than the 22.1 we've indicated.
Yesterday, we saw some big news come from Stellantis and some big changes to their network. Dash, how worried are you about the brands that you represent and them changing the way that their networks are operated?
So I think in terms of the Stellantis news, I think it's not really a surprise. I think one of the things I always like to talk about is if you look at the three German brands, the premium brands are incredibly successful. They all three have around a 7% market share, and they have around about 110, 120 retail points. If you look at certain other brands, they have similar market shares and are operating with sort of double the number, quite frankly. So it's not difficult to then say, well, have you got too many retail points? So I think what Stellantis are doing is absolutely the right thing for what it's worth. So I support those changes. Clearly, there will be some disruption in those networks, and there will be some people affected as a result of that. But fundamentally, what they're structurally doing, I believe, is the right thing for those networks. I mean, from a Marshall perspective, we only have less than 5% of our networks with Stellantis, so there's not it's not going to be a really big impact for us. Our operations perform very, very positively. We have a great relationship with Stellantis, a great relationship with Alison Jones and her team. And actually, from a Marshall perspective, I think what Stellantis will be looking for is strong partners with strong balance sheet, strong moral values, strong culture, and strong track record of performance. And I think that's where it's a strength for our group. And I think as a result, there will probably be opportunities that will hopefully be presented to us.
There is talk that they might be wanting to put some of those brands together under one showroom roof. Dash. I know it's not something that you're a massive fan of. I mean, what do you think that would mean for Marshalls?
Well, yeah, James, I am not a fan of multi-franchising personally, and I'm still not a fan of multi-franchising. So I'm of the opinion that what we do as a franchise retailer is we deliver brand values for our partners. And I also believe that if you have multi-franchising, you become jack of all trades, master of none. So I've seen it many, many times before. In fact, when I joined Marshall, around 2/3 of our portfolio was multi-franchised. Today, we have no multi-franchise businesses in our group. So I'm not saying there's anything wrong with it. It's just a preference that works for us. And so I'm not a big fan. I would rather have single solus dedicated operations. And I think, we'll wait and see what Stellantis's plans are for their strategy. And, we'll assess whether it's in line with ours. If it's at multi-franchising, then it may be something that we want to pursue or not pursue. But, said many, many times before, I'm not a big fan, but we'll wait and see what their plans are.
Dash, it's been a tough year for the motor trade, but the motor trade seems to have done pretty well off the back of it, and we've seen some impressive results. What are your thoughts on bonuses during this time, and have you taken yours?
So in terms of bonuses, that's clearly a matter for remuneration committees to deal with, I think. But I also think there's a degree of how do you feel about it as an individual? Not for me to comment on others. It's a personal decision for them and their boards. I think from our perspective, last year, as I said, we went into the year with pre-pandemic with an expectation of delivering £20 million. We ended up delivering £20.9 million. So, arguably, we triggered the bonus payments for the executive management team. The management team took pay cuts through the pandemic. So our moral compass did the right thing there. We also rewarded our colleagues by enhancing payments through the furlough period. We also did not invoke caps of £2,500 for our people. And so you've got to kind of look at all key stakeholders. And I think from our perspective, whilst, yes, we did exceed the targets, I think you also have to have a look at the numbers and say, well, how did you actually get there? Now, we know if you stripped out government support, we didn't make those sort of numbers. We claimed £20 million worth of furlough. So to me, had we not had the government support, we wouldn't have hit those numbers. So to take a bonus, I felt, and our management team felt, that it was inappropriate. So I appreciate people have different perspectives on that, and we respect their opinions. But from our perspective, I didn't think it was morally right. And I'm proud that we voluntarily went to our board in consultation with our remuneration committee and said we did not want to take these bonuses, and we took zero.
And Dash, lastly, I know you've got a busy schedule today. Any further thoughts on agency sales models? I'm hearing rumours that there are some big groups, possibly Volkswagen Group, looking into this further. That you've obviously got a lot of those brands in your portfolio. What would the agency sales models mean for you?
Look, agency is going to come, in my opinion. So, we've talked about it many times over the years, James, haven't we? And I don't think it's something we should be scared of. I think fundamentally, I think it will be a good thing because I think it will protect residual values for customers. It will enable manufacturers to have a lot more ability around pricing. It will also potentially be a challenge for disruptors to the market because, if everything's at the same price, surely that's a good thing from a transparency perspective for our customers. Surely that protects residual values. Remember, all of our new car consignment stock, which for us varies between 200 and 400 million pounds, depending on the cycle, that goes off our balance sheet. We save interest costs there. It comes down to, do you fundamentally believe, it's no more complex than this, do you fundamentally believe there will be a requirement for retailers to fulfill services for OEMs? If you believe that, then you'll be fine. And we'll talk about the remuneration in a second. If you don't believe that, well, the question I would say is, if you don't believe there's a requirement for retailers, how are OEMs going to do test drives? How are OEMs going to do servicing, sell digital services? I can't see how it can be fulfilled. So I firmly believe there will be a requirement for fulfillment. Now, it then comes down to remuneration. Okay? As long as our remuneration is in line with what we make today, well, then what's the problem? And it fundamentally, in terms of that remuneration point, there'll be some people that say, oh, well, the OEMs will cut you out. If you really believe that, then, okay, who's going to invest in these franchises? OEMs require good partners, good investors, and investors are only going to invest in these businesses if they're viable and they make an adequate return. So, for me, I think agency will absolutely come. It is coming, and we just will work through it. And I feel pretty confident that will be a good thing for our business and our customers.
Dash, thank you very much for joining me on a busy day. Hope the AGM goes well, and nice to see you as always leading the way when it comes to big decisions. Thank you very much.
Well, I've got my vote at 10 a.m, James, so keep your fingers crossed. Hopefully I'll get through.
I've got my fingers crossed for you, Dash. Nice to talk to you. Okay, so nice to see you. So for more car dealer lives like this one, you can log on to cardealermagazine.co.uk and click the live tab at the top of the page. I'll see you next time. Thanks for joining me. Goodbye.